full disclosure, I am invested in a few different chip stocks, including AMD, Taiwan Semiconductor, and Nvidia, but I will do my best to not be biased in today's video. And as always, you guys know that I really don't care what any of you do with any of your money. I'm just here to entertain you and share my opinion on some different stocks. With that said, a lot of you have been asking me to talk about Intel stock because it has taken an absolute beating lately. So I hope you guys enjoy this full stock breakdown and analysis. Let's get started. What's up everybody, my name is Ale and welcome to my world of stocks. So I think the way that I'll structure today's video will be that we'll take a look at the stock, then we'll transition to the pros of Intel, then we'll move on to the cons of Intel, and then I'll finish up the video with my overall conclusion and my opinion on the stock, and I'll even let you guys know if I plan on buying Intel stock anytime soon. Alright guys, starting with the stock, ticker symbol INTC. We can see that they are still up by almost 70% in the past 5 years, but most recently the stock was having a really bad 2018 before surging up a huge amount this year, only to fall right back down in the past month, where they have now dropped by over 26% and they currently sit right around their 52-week low. So with that said, we might as well transition here to their pros because the drop in stock price has given them a very attractive valuation. In fact, their trailing and forward PE ratios are both less than 10, which by the way, in the past 5 years, it's been pretty rare to get the stock at this multiple. And for reference, some of their competitors and or peers trade much higher. Here's a chart of trailing PE ratios, and you can see that AMD and Nvidia are both much higher than Intel, with AMD topping over 100. However, it must be noted that many of these companies are expected to experience immensely more growth than Intel, so when we look at forward PE ratios, the gap is reduced by a very large amount. But we'll talk more about growth in the cons section of this video. For now, Intel still comes out on top with a cheaper valuation in most cases. Now, it's not like Intel hasn't experienced some decent growth themselves, as they've increased sales from $55 billion in 2015 to $71 billion last year, with their growth rate also reaching double digits last year. And in my opinion, profits have looked even better, as they almost doubled their adjusted net income from $12.2 billion in 2015 to as much as $21.5 billion last year. That's growth of 27% and 28% in the last couple of years, respectively. This high profitability has allowed them to pay a very nice dividend that still yields over 2.8% with a pretty low payout ratio of just 33%. The 5-year growth rate is pretty low at just 6%, and they only have 5 consecutive years of growth, but overall the dividend has actually grown for a much longer time period, just maybe not consecutively. In any case, throughout the strong performance history of Intel, they've become a market leader in more ways than one. Now, when looking at GPUs, we have discrete and integrated. So far, Intel doesn't really deal with discrete GPUs, but they are expected to finally offer them as a product sometime next year. Meanwhile, that specific market has been controlled almost entirely by Nvidia and AMD, and Nvidia really controls most of that market, with AMD trailing behind. But when looking at all GPUs combined, meaning that we're also counting integrated GPUs, which are usually less powerful but more economic GPUs that are either combined with the CPU or directly into the motherboard, you can see that the story completely changes, as Intel commanded an enormous 70% market share in the second quarter of last year, which is the last quarter I was able to find this information on. But of course, Intel is mostly a CPU company, and when looking at that specific market, according to CPU Benchmark, Intel still controls over 70% of the market. And we'll come back to this later in the cons section, because we should also talk about the gains that AMD has seen and some of the losses that Intel has seen. But for now, let's just kind of continue with the pros for Intel. And so another market that Intel is making a lot of progress in is autonomous driving, thanks to their acquisition of Mobileye. See, back in 2017, they acquired an Israeli tech company called Mobileye that specializes in autonomous driving technology for over $15 billion. Essentially, Mobileye can build out the autonomous platforms, while Intel can supply the processors needed to handle the complex calculations needed for the autonomous vehicle to make its reactions in real time. It's essentially a match made in heaven, and one that could lead to surging sales for Intel in the future. In fact, some analysts give the autonomous vehicle market a 20% compound annual growth rate through the next decade, while ARK Invest goes as far as to call the platform provider market exceeding $2 trillion by 2030. And they're already making great progress, as a report from Reuters from just about a year ago stated that 27 million cars from 25 different automakers were already on the road with some sort of driver assistance system, and Mobileye apparently controlled over 70% of that market. Now, I'm not sure how that factors in with Tesla, since they used to use Mobileye but have since parted ways, but regardless, they state that Mobileye is used by very large automakers, including General Motors, Nissan, Audi, BMW, Honda, Fiat Chrysler, and even NIO, which is that sort of kind of a Tesla copy out in China. And Mobileye is even working on advanced level 4 autonomy, with plans to enter the robotaxi market probably in 2021. By the way, their autonomous business is calculated within their IoT segment, and that's grown from $2.3 billion in 2015 to $3.5 billion in 2018, with growth rates of mostly above double digits. On top of that, Intel is a cash generating machine that did over $14 billion in free cash flow and nearly $30 billion in operating cash flow last year alone. And because Intel has been so profitable, it's allowed them to not only return money to shareholders, as we discussed earlier in their dividends, but it's also allowed them to invest heavily in research and development to help them kind of stay on top of the markets that they operate in. And here they've spent as much as $13.5 billion last year, while a competitor like AMD has spent much less, like astronomically less, only spending around $1.4 billion. So it's like not even comparable. This has ultimately allowed them to compete in a variety of lucrative markets and also dominate many of them, like the data center, autonomous driving, machine learning, deep learning, the Internet of Things, and artificial intelligence markets. But speaking of AMD, I think it's time now to transition to the cons of Intel, and that mostly has to do with increased competition, exposure to a weakening Chinese economy, and also a lack of growth in their future guidance. So let's tackle each of these one by one and let's go through them. Now, we talked about Intel having dominant market share earlier in the video, and while that still remains a valid argument, it is also true that AMD has absolutely stepped up their game and begun to steal market share in recent quarters. In fact, if we look at AMD's reported numbers from the fourth quarter of last year, it appears that they've been able to jump up in market share from less than 1% of the data center market in 2017 to nearly quadrupling that percentage to 3.2% market share last year. That may not seem like a lot, but the data center CPU market is essentially a duopoly between Intel and AMD, so any gain for AMD is a direct loss for Intel. And again, jumping from around 1% to 3% may not seem like a huge jump there, but you're talking about an addressable market that, according to AMD, by 2021 is estimated to be worth $17 billion just on the CPU side alone, and almost $30 billion when you combine it with the GPU data center market. So any small market share for AMD and small loss for Intel is actually pretty significant. Not to mention that several analysts are projecting that AMD will steal as much as 10% of the market by next year due to their success of their 7nm EPYC server CPUs, which I believe are set to launch in Q3 of this year, but Intel isn't even launching their 10nm server chips called Ice Lake until the holidays, and newly leaked images suggest that they may not even come out until sometime in 2020, alongside more 14nm chips called Cooper Lake. Again, it's been difficult to find exact timings for these different products, but it mostly looks like Intel will be a bit behind AMD, and that could obviously translate to more market share loss. Now, generally the smaller nanometer count results in better performance, although many consider Intel's 10nm to be very comparable to AMD's 7nm, but even then Intel is still falling behind by a considerable amount of time. And this isn't the only time that Intel has dealt with these type of issues and delays, as they are still dealing with a CPU shortage that is expected to last into the third quarter of this year. Not only is this hurting Intel's growth, but it's also giving AMD the opportunity that they needed in order to steal market share from Intel. In fact, AMD's desktop market share has now climbed from 12% in Q4 of 2017 to almost 16% in Q4 of 2018, with notebook share almost doubling from just 6.9% in 2017 to over 12% in 2018. Not to mention that new reports are saying that the security patches for Spectre and Meltdown leave Intel's performance getting hit 5 times harder than AMD where applicable. And as if all of this negativity wasn't enough, in their latest earnings call, Intel noted that weaker data center demand alongside increased headwinds in China, which by the way are only likely to get worse with the whole trade war that's going on right now and how that's impacting China's economy, but as a result, they had to lower their revenue guidance for the year by $2.5 billion, which turned their sales into a 3% year-over-year decline. And their outlook for the second quarter is just as bad, with revenue expected to drop by 8% year over year and their EPS to drop by 14% year over year. So pretty significant drops, whereas before they thought that revenue was actually going to be relatively flat. So in conclusion, I really feel like I have mixed feelings on Intel. On one hand, I think that they have a very attractive valuation, a very nice dividend, they generate a lot of cash, they invest very heavily in research and development, which will probably lead to them having continued dominance in some very lucrative markets. But on the other hand, I think that we continue to see some short-term struggles, AMD possibly chipping away some more market share. We know that the whole trade war between the US and China will probably continue to drag down the overall market in general, but maybe hit some stocks like Intel a little bit harder because of their increased exposure to the Chinese economy, which we're already seeing the effects of with Intel's revenue guidance already being lowered, and they're struggling with execution, not being able to meet demand in their CPUs. So all of this can really result in advantageous positions for AMD to kind of steal some market share. So that's kind of the worries that I have with Intel in the short term. But in the long term, it still remains the same great stock it's always been. Long-term investors still collecting dividends on it and probably adding to their positions on this weakness for a long-term kind of stable play on semiconductors and some very buzzword kind of trend markets like artificial intelligence and the Internet of Things and autonomous driving and so on. Now, for me personally, I already have too much exposure to the semiconductor industry. I'm already invested in AMD, Nvidia, and Taiwan Semiconductor, and while those valuations may not be as attractive as Intel, I think that with a little bit added risk, they do also offer a little bit more upside potential. So that's why I kind of like those. But overall, I just have too much exposure to the industry. So I'm not looking to add Intel to my portfolio at this time. But if it continues to drop, it might be too hard to ignore. But anyway, I asked you guys on Instagram how you feel about Intel at these levels and if you'd be willing to buy. And we had over 200 votes, and 58% of you said yes, that you would buy, and 42% said no, that it's not a buy at these levels. So it sounds like most of you are having some kind of conflicted feelings as well. You maybe like Intel as a long-term stock, but you're being a bit cautious at this moment, and maybe you're waiting for a little bit of a better price if you can get it. But anyway, I hope you guys enjoyed this video. Leave your thoughts and comments down below. Hit the like button if you enjoyed the video, and I'll catch you guys in the next one. Take care. Bye-bye.